Okay, so I don't even know where to start. This is getting weird. These price movements are very suspicious. Now, I would love to chalk this up to FOMO. I would love to chalk this up to a fad. This is central banks buying. Okay, central banks are buying gold at staggering rates, and it's driving the price up to astronomical highs. And this only means one thing. The reason why central banks are buying gold is because they're worried about the future. And if central banks are worried about the future, you should probably be worried about the future. However, if you look at retail investor exposure to the stock market, for example, it's at record highs. And in fact, exposure to commodities like gold, like copper, like silver, and other precious, not just metals, but commodities, is at all-time lows. That's the crazy part with all of this. Now, I want you to look at this graph. This is a commodity super cycle graph. This tells you everything you need to know about the correlations that we're currently experiencing with precious metals and just unrest around the world. But look, before that, let's just put this in perspective. This is how I like to explain it to people. Okay? So we're talking back down here, we had one war going on. This is back in the 1700s. Instead of saying the 1700s as in century, I'm referring to it as the gold price. Back in the 1700s, we only had one war, and it was with the Russians and the Ukrainians, and they were fighting over some pipelines and stuff. And then, as time went on, well, we decided one war wasn't good enough, and we kind of plateaued along the 2000 level. Remember, Russia started getting sanctioned, they started seizing assets. All of a sudden, we have another front open up in the Middle East, and that starts to hike things even further. Civil instability, we had a Trump assassination in the run-up here, and we had gold cresting here at 2,800 an ounce, and Trump got elected and it went back down, but not for long. Everybody thought that this was it. We're going to be told all the secrets of Fort Knox and all the secrets of the universe, and crypto was in, and we're going to get a hold of the financial system, but nope. We went right back to fighting World War III. In fact, we opened a new front, or not a new front, but we opened a new dimension, and that was the trade war with pretty much everybody. In addition to that, we had Pakistan, India flare up at this time. We had the Iran war, and here we go now. Just in the last few days, we have a massive conglomeration of warships in and around the Venezuela region, which is suggesting yet again another war. Now, war is inflationary. So you're basically building stuff just to destroy it. It's incredibly destructive when you build stuff and you have to invest energy and human resources into that stuff and you just blow it up. Well, that's going to raise the price of everything else to do this stupid thing that you're doing. Now, this is an incredibly important graph that doesn't get enough airplay. It's showing you that at every major war, there is a peak in commodities. So that could be, not only strategic reserves of oil and food and medicine, but indeed precious metals, copper, platinum, silver, gold, things like that. We see peaks during the War of 1812 and Napoleonic Wars. We see another peak during the Civil War of commodities. Things are running scarce because we're building stuff just to blow it up. Then, of course, it crashes, long depression, and then we have another commodities peak. And this isn't necessarily a depression per se. It's just showing you because it's not necessarily correlated with the stock market, right? In fact, it's almost inversely related to a certain extent. And so just after World War I, we hit another peak because, of course, some of this takes a while to find its way into the system. So even after the war is over, the inflation cycle can run a little hot because it's playing catch up. World War II didn't quite hit a peak. Nonetheless, still a spike. And the Cold War era peak as well. And then we had the Great Recession and the beginning of all of the color revolutions and the Middle Eastern wars. Everybody has a grievance with the refugee crisis that was a result of what happened right here, okay? And then we had this next explosion of money printing, And so everybody reinvested into the stock market, cranking it to all-time record levels of valuation, like we're seeing right here in this Shiller PE ratio. This means that we are in the second most overvalued market in history, next to the dot-com bubble, and there are many metrics to suggest, depending on how you look at this, that we're far worse than the dot-com bubble, because in addition to that, we have a lot more debt. So it's a much worse situation than we were once in. So we know that eventually this thing has to swing around. Now, is it going to go down a little bit further? It seems like the lows get a little bit lower, as you can see, because of course the market gets a bit more malleable. The Fed gets a bit more clever in terms of how it can keep the party going. But it's starting to look like things are turning around. And that is evidenced in the gold price, because gold is for war. The only reason why central banks, which are the driving factor in gold, this isn't individuals and private purchases that are primarily driving this price. It's central bank buying that is driving the price, even though private holders comprise the majority of gold around the world. For example, the Chinese, they only have about 2,200 tons of gold. This isn't entirely up to date. This is 2019, so it's a little bit old. They have around, 2,500, so they claim. Maybe it's way more than that. It doesn't matter. The actual amount of gold that private individuals have in China is more like 30,000 tons. So if you add up all the little gold jewelry and, whatever, corporate might hold in its holdings, in its private reserve, and individuals, groups, companies, things of that nature, you add it all up, it's 31,000 tons. And India, surprisingly, is a second with 30,000 tons. So India is sitting on an incredible amount of real wealth as denominated in gold. Who's been buying it in the past? Well, not surprisingly, the countries that are straddling the line of World War III. So Russia, China, Turkey, Poland, India, Uzbekistan. Remember, the United States has the most gold in their central reserve, so they claim. We're still waiting on Trump to open the doors of Fort Knox, one of those promises that is yet to come to fruition. So this is why the price of gold as measured in Canadian dollars is $5,000 an ounce. $5,000 an ounce. That's incredible. Absolutely in-fucking-credible. And nobody's talking about this. The only people who are talking about this are the financial websites. And they know that normies don't read Forbes and Bloomberg and things of that nature. The normies are looking at NBC, CNN, and Fox News. They're not talking about the price of gold. At least not as much as they should, considering it's up 33% year over year. And this isn't any, run-of-the-mill asset class. For gold to go up 33%, that means that the net value of all the gold in the world, or all the gold in, all the gold in existence, I suppose, or would it be, is it all the gold in existence? Yes, the sum total of the gold market is around 23 trillion now. It keeps going up. There was a time when 20 trillion was a big deal. Well, now it is getting very high, all right? So, where's all this money coming from, I suppose? So money is being pumped into it somewhere, but it's not only that. Now, war is inflationary. War requires stuff, right? So it requires things for rearmament, for ammunition supply, to build various reserves, not only of foods and oil, but ammunition and all of these things, right? There's also sanctions and disruptions, logistics. There's seizure of various assets at play here. So gold, being that there's no counterparty risk, is the ultimate safe haven for all these countries that are straddling the line of conflict. This is telling you that things are incredibly unstable right now. Now, it could only get even more wilder than people think, because take a look at this. Back in the 1970 to 1980 period, I think the price of gold 20x'd during that time. 20x before retracing back down and staying there for, many years, all the way until, the year 2000, right? And so this is where we had this period of stability. We had the collapse of the Soviet Union, and the US, this was their heyday of domination. Now, of course, it started to change after 2011, and I already told you the story. But this just proves that this bull run could go very, very high. And I'm not approaching this from the perspective of a person who's trying to get you to buy gold. I don't have gold links in the description. I tried that a few times, but I don't know. It's not that I am against it at all. I just rather talk about it without having any sort of dog in the fight. And I can tell you that this is a sign that things are getting really, really unstable, and they're not telling you. This building right here is the Federal Reserve Bank in New York City, 33 Liberty Street. Okay, 33 Liberty Street. What a surprise that this is the place where we are allegedly holding the most gold in the world, next to Fort Knox. Okay, so we know that the U.S., with the biggest supply, at least in their balance sheet anyways, of gold, stand to benefit the most, in fact, from the increases in gold price, at least as far as their Central Reserve Bank is concerned. Not as far as their population is concerned, because the amount of gold in possession of American civilians is only around, I think it's 26,000 tons, but that's, of course, spread across a much smaller population, right? So per capita, yes, we still have a lot of gold. I would venture to say that a lot of that is in the hands of the elites, because it certainly ain't in my hand, all right? So I suspect that we're going to have some real hard times ahead, and if you ever needed any more evidence or anecdotes to support the idea that we're going into World War III, this is it. This is it right here. This one graph right here shows you, and you would think right now that we are, and this isn't entirely up to date, but it's mostly up to date. I believe this was 2024. I've seen other graphs that actually touch this line here, and it's closer to 2025. The only thing that's going up is gold and silver for the most part. Other things, maybe copper a little bit. Most commodities are trading at all-time lows. Most stocks, like the Big Seven, are trading at wildly, excessively exuberant levels of valuation that likely are far detached from reality and ultimately have to come back down, which means that we are approaching a war cycle. So despite all of these wars that are currently being waged, we are still down here, which is how disconnected this whole Ponzi scheme, this global fiat-based Ponzi scheme, because this is the first really of its kind, right? Far more insidious than the British pound system of global reserve currencies. The U.S. Federal Reserve has taken it to a whole new level of economic distortion. And once that becomes realized in tangible commodities, boy, is it going to get ugly. It is going to get very ugly, because right now you have 44% of people with retail exposure. 44% of the retail market is, or the stock market is retail based, or is that? No, it's 44% of people are exposed to stocks, which is the highest in history. We're talking about individual retail investors. In the most overvalued market in history, there's no surprise that insiders are selling in droves throughout this period of time. What's propping this up is foreign investment and mostly retail investment. So all of them are likely going to get rugged at some point or another. Another interesting fact you should know, the U.S. government, via the Department of the Interior, drafted a proposal on August 25th, proposed adding silver to the official list of critical minerals, LCM. This designation recognizes silver's essential role in clean energy, solar panels and electronics, defense, and healthcare, and addresses supply chain vulnerabilities, particularly dependence on imports. So they want to hoard silver for war. Now, in terms of this whole idea of revaluation of gold, I don't suspect it's going to happen. Now, George Gammon made an excellent video that I would encourage you to go and watch. I believe it might have been on the Rebel Capitalist, or it might have been on his self-titled channel. And he was talking all about how, reevaluation, what that would mean for the United States, how they would do it. And basically, if you didn't know, right now the price of gold, as far as the U.S. government is concerned, is still $42 an ounce. Okay, that means that's what the U.S. government, is willing to buy gold off of you for. Now, that was set, I believe, back in the 70s, if I'm not mistaken. Now, what they could potentially do is revalue its gold to that new price, which of course would take the 8,133 tons that they have right now, and this number hasn't moved that much, and it would make it worth a lot more. So right now it's net worth about $850 billion market cap. You could probably, if you were to quintuple the price, or if you were to, let's say, revalue that gold as being fairly valued, well, of course, it would take it to, in the trillions of dollars, possibly covering the entirety of the debt. But it's not that simple, right? Because the majority of the planet, including India and China, would also correspondingly benefit. So you're not really increasing wealth. You're not really reducing your balance sheet. Of course, it would destroy the dollar that it's being measured in. Now, there's different ways that they could potentially do this with gold certificates and whatnot, but there's always knock-on effects and unintended consequences of doing something like this that would likely, end up bad. And at the end of the day, if they can print money, why wouldn't they just print money instead of revaluing gold? I mean, if everybody's still hip to that, that's probably what they're going to do first. So essentially, I'm not even going to bother to explain how it works because it's kind of confusing and outside of the lane of this channel. We have had many guests on the channel before break it down in detail, but I would encourage you to go and check out his video because he does a great job in explaining it. Now, I just got to say that this is a real ominous sign to see it move so quickly. And, when you see it consolidating here at this level between 3,400, and it just shot up from like less than 3,000, it kind of touched it a little bit, and then it came back down, then it shot up about, I don't know, what's that, like 15%, and then it kind of traded sideways very quietly. And this is how you knew it was a floor and not a ceiling, because they didn't touch it and go right back down, right? So this is a consolidation right here, and eventually, of course, all of these problems began to mount. Now, in terms of what's going on in Venezuela and on the war front, I'm going to do a separate update video about that today. I just wanted to share some perspective on this because this is crazy, man. And if you needed any more confirmation that things are getting out of hand, we've been warning you guys that gold is going to be, ticking upwards since right down here back in 2022. This is when I started talking about gold. I really started to talk about it when the war with Israel began, and that's when it kind of hit that second bottom at around, I believe it was $18.50 an ounce, and then it was just straight up from there and off to the races. Of course, on the Canadian Prepper YouTube channel, we've talked about gold as a for prepper utility for many, many years before this big explosion in price. And I've always thought of gold not as a get-rich-quick scheme, but as a way to retain your wealth. If the price of gold is going up, it's bad for two reasons. Number one, it's bad because that means that the social conditions, the economic conditions are getting progressively worse. And so even if you were, doing better as a consequences of gold going up, in that environment, that's going to be a bad environment to live in. It's going to be much less secure, right? So that is one of the biggest potential downsides to all this. It also means that your currency is likely being devalued. And even though, maybe you purchase gold at $2,000 an ounce, say, okay, so you're happy because it's almost doubled now, but has the price of everything else almost doubled? When you factor in, especially with logistics now, with the decoupling, with the tariffs, depending on which side of the border you're on, that may or may not affect you, the cost of labor, all of these things are going to factor in. And so you're really not getting ahead with gold. maybe gold is overshooting right now and there's going to be a retracement back down to 3,300 for a year or two. You just never know, right? But because wars are ramping up and we know they're about to do an intervention in Venezuela, that's a colorful way of putting they're going to start a war. They're doing that for myriad reasons. It primarily revolves around the largely untapped massive oil reserves in Venezuela, and it also just revolves around regional, Western dominance and South American dominance. When I say Western, I mean the Americas. The United States wants to control this region, cut the East out of it so they can't stand to benefit, and that's why the Panama Canal, and that's why Venezuela, and that's why getting wrangling people back, into Mexico and getting a hold of the Central American and South American situation is essential if you're going to fight World War III. You also potentially might be bugging out there, right? Because if you want to escape all the nuclear fallout, if what we're told about nuclear war is true, which I actually don't think it entirely is, it's more pertinent to the Cold War when they had, tens of thousands of nuclear weapons. I don't think we have enough nuclear weapons to cause nuclear winter, but that's just my personal opinion. We did at one point, but I think they're so incredibly targeted at this point in time, and they're so precise that it's very likely that if it does happen, it's not going to be a mad scenario, and that's why they're more likely to pull the trigger, okay? So I just can't believe it's sticking up, and this is all in the absence of no media coverage, right? Zero media coverage on this whatsoever. The price is still rocketing just on the basis of central bank gold buying alone. Now in China, the retail class is buying there, but I mean, it hasn't hit here yet, and the United States arguably has a lot of the disposable income in the world is in the U.S. So when people start to find out about it, and when it goes beyond just the Costco purchases of gold bars, I could easily see this rocketing to $5,000 an ounce, like within the near term. Now, I asked ChatGPT the other day, and I asked Grok. I advised it that the gold inventories in the world are actually dwindling. There's about 40,000 tons of gold that's recoverable left. It was 50,000 tons a couple of years ago. Now it's probably getting close to that 40,000, right? So by 2050, theoretically, there's going to be a lot less gold to mine, at least not using any conventional way. Maybe we go to the bottom of the ocean and we get robots, going and sifting through the sand and stuff. But, we're a long way away from that. And for us to do that, the price would have to be high in order to make that sort of mining lucrative. So it gave me a number, and I shit you not, of 50,000 base case by 2050. 50,000 base case, all right? So that's over 10x, that's like 15x your money. Might not quite, but around 15x more or less. And over 10 years or 25 years. Now, that's, assuming inflation isn't just hyperinflation, that's a pretty good return. But again, there's a scarcity being factored in there. There's a lot of things because, gold is approaching the limits of what can be mined. So that's a new dimension that people haven't factored in yet because they're still producing. Annual gold production is still pretty much the same as it's always been. It's starting to plateau. But once that starts to tick downwards and supply cannot keep up with demand, then we see a whole new other, bullish fuel that could rocket this even higher. Anyways, guys, I'm not telling you to buy gold. I'm telling you to stock up on gear and preps. In fact, if you haven't capitalized on it already, check out the CanadianPreparedness.com website. Use coupon code 20PREPPER for a limited time. Everything is moving out. Get it while you can. 20% off store-wide, high-quality stuff. If you're a Canadian person, because we can't ship to the U.S. anymore, it's been way too complicated. If you're in Canada, then you absolutely need to capitalize on this because a lot of the stuff that we bring in from down there, of course, we had to deal with all the border issues to bring it up here. And the amount of red tape and bureaucracy that they're bringing into play here is just staggering, and which is why I cannot wait to get out of the business and just strictly focus on preparedness and videos. Anyways, go check out CanadianPreparedness.com. You can get all kinds of deals on just an incredible array of survival gear. All right. Okay, I'm going to upload this, and then we're going to talk about the World War III update.